Welcome back to Cleve, Loveland and the Lone Ranger Radio Show. My name is Bruce Woodburn, alongside Cleve Loveland. Cleve has ducked out, and he's leaving the rest of the show to me today. So we're going to get you all caught up on all the news that's going on in the industry right now. So first things first, if you have any questions for me when it comes to a mortgage or refinancing, purchasing, what's the right loan for you? How do you get the most out of a refinance? Is it too late to refinance? Any questions you have when it comes to that, you feel free to give me a call. You can reach me directly on my cell phone or text me at 407-250-9144. That is 407-250-9144. Or you can get on the interweb and you can go right to webringyouhome.com. That's webringyouhome.com. All right, before we get into what's going on in the industry, I want you to write down this date. That would be January the 26th at 6 p.m. I am going to teach a home buyer class. This is not a first-time home buyer class, although if you are a first-time home buyer, you would be crazy not to get into this class. I am not going to charge you for this class. To me, the class is worth $2,000 all day long. It will be a Zoom class. It'll be about an hour and 15 minutes, but it'll be a game changer for all of you. If you own property and want to invest in real estate, but not quite sure the easiest and best way to do it, I am going to share with you how I did it, how it worked for me, and I'm going to show you I'm going to help you avoid any of the roadblocks or the humps that I incurred so that you can learn from any of my mistakes and experience wealth. I started this program called my Leapfrog program on how to buy homes back when I was in my 30s, and it took me a while to develop it, but I figured out how to maximize the amount of homes that I could purchase with the least amount of money. So if you're interested in that, you don't have to be rich to invest in real estate. You just have to be consistent and be willing to get in the game, and don't stop until you have everything that you need. And I'm going to show you how to do it, and I'm going to show you the easiest way to do it. I didn't have a lot of money to invest in real estate as I was growing up, and most of you probably don't either. I'm not a trust fund baby. Matter of fact, I didn't really have that much money to work with at all, but I was able to amass a lot of properties and make a lot of money in real estate and rental income, and I can show you the easiest possible way to do it. Just follow my directions, but you must enroll in the class at webringyouhome.com. That is webringyouhome.com. And we'll go ahead and there's only 100 seats available, so if you want in, get in now. You will download some material in advance, and it will be an interactive class. Now, I probably won't be able to interact with all 100 of you, but I will be keeping an eye open on things. Now, I don't want you to get into this class if you're not serious about buying a home or investing in real estate. Don't waste your time. Don't waste the time. Don't take up a seat for somebody that's going to benefit from this. As I said, I only have 100 seats available. WeBringYouHome.com. That's January the 26th, 6 p.m. It will be a Zoom meeting. Bring a pad and paper handy, and pad of paper and a pen handy, and you're going to take down a lot of notes, and we're going to get busy, and we're going to make some money in 2022. All right, getting right down to things. How'd things go in the market this week? Well, I'm going to tell you something. It was one crazy first week. Welcome 2022. Holy smokes. I thought I was glad to get rid of 2019. I got 2020. And 2020, what a show that was. Although, you know what? I made a lot of money in 2020, and I made a lot of money in 2021. But the market was nuts. Very unpredictable. But real estate, got to tell you, was where it's at. Stock market, definitely where it's at. I'm about diversification of assets, and real estate is always something you want to be in. Real estate is stable. It keeps moving forward. So let's talk about what happened this week in the market. I digress for a second. I've been telling you for the last few months that interest rates are going to rise. Okay? Why are they going to rise? Because the Fed has tapered back on buying mortgage-backed securities. If you think the market just was bearing interest rates in the 2s and 3s, you were wrong. The market did not bear that. The reason you had those false reduced interest rates was because your federal government in the previous administrations was purchasing mortgage-backed securities and bringing the price of loans down, not because the economy just warranted it. No, it was because of mortgage-backed securities being purchased by the federal government. Now that the federal government has tapered or reduced the amount of mortgage-backed securities and is going to completely cut them off at some point, that's causing interest rates to rise because the private sector doesn't want to get a rate of return of 2.5% on a rate or 3.25%. Would you invest your money if I told you I'm going to get you a 3% return on your investment? No, you can get that in a bond fund or in a life insurance fund. Who wants to do that? You want to make money. You're not going to make 20% return on your investment when you're only got a return of 2%. Doesn't happen. So when the private sector is the only ones buying mortgage-backed securities, do you think they want to get a small return on their investment? No. So if they're the ones buying mortgage-backed securities, guess what happens to interest rates? They start to go up. So putting all that in perspective, what happened this week? Well, the bond market lost 116 basis points as of midday Friday. 116 for the week. Now let's just put that in perspective. 100 basis points costs you 1 point extra on a loan. So whatever loan interest rate was at 0 points, let's just say it was 3.25, was at 0 points on Monday, was at a 1.2 points by Friday. Now, if your average loan amount was say $325,000, then 1.2% cost you an extra $3,250 in 1 week. 1 week cost you $3,250. So that's the price of houses going up. So that's one thing, the price of interest rates going up. Now, since most people don't want to pay the points, what happens is mortgage companies, banks, and lenders don't have to charge you the point. They just increase the interest rate. So instead of it being 3.25, it may be 3.5 or 3.75. So it just increases it. Now, what does that do to the consumer? So first of all, it reduces their buying power. And if first-time home buyers didn't have an issue with buying power already, come say November, December, it just got worse. So they're seeing interest rates rising and the price of housing going up. So the person gets hurt are the people that don't own and want to buy. And it's unfortunate for them because their rents are going up by 7.5% per year on average in Central Florida, many cases even more than that. And since there's a shortage of rental properties, what do you think landlords are going to do? They want you to move out so they can raise up the rents, and they're going to do it. And thus they should do it because they are in the business to capitalize on their investments as well. You either are in the game or you are the game. You have to make that choice. You are in the game or you are the game. Which one are you? Are you the game or are you in the game? So my goal and my commitment is to help more people become homeowners. Why? Because then you're in the game. I don't care what interest rates are. I don't care what the prices of houses are. You get into the housing market. There was only one time in your lifetime that we saw a bad housing market, and that was in 2007 and 8. It started recovering in 9-10, and by the time we got into 2000, say 15, 18, it had already recovered, and now we are making more money than ever. A house that you could have bought last year is about 22% higher this year than it was last year. Well, put that in perspective. That would have been in your pocket. But if you're renting, you now pay the difference. Okay, so we've got that all down now. You have any questions, you call me at 407-250-9144 because now we know the problem. Now we got to fix the problem and get in the market. Now, if you're a first-time home buyer, or you are currently renting, there's only two reasons you're renting. You're afraid, okay? Or you just don't think you're going to qualify. And those may be the same thing. Why are you afraid? Well, I don't think my credit's good enough. I help people fix credit every day. And On my FHA products, I don't even have a credit score requirement. So that's not a reason to stop right now. Pick up the phone and call me at 407-250-9144 or go to my website at WeBringYouHome.com. That's WeBringYouHome.com. Apply right now. Go to my website, stop the car, pull over on the way to church, pull on the way over on the way home from church or wherever it is you're going today, Saturday, mowing the yard, doing yard work, working, doing laundry. Write that number down because here's my commitment for 2022. I'm committed to helping the most first-time home buyers that I've ever helped in my career. I want to close 600 new first-time home buyers in 2020. That's 50 a month. Now, I can't do that without your help. My loyal listeners, I know you count on me. I know you trust you're going to get the right information. You get no false information. You got me, a local business guy, just a dude here in town, been doing mortgages for 33 years. And I am committed to helping you and your family make sure you get the best possible mortgage at the best possible interest rate. Heck, I'm a national lender. I'm in all 50 states. I run two radio shows. I watch the market day in and day out, and I can guarantee you that you will never, ever find a mortgage company that is more conscientious about their clients' needs. Never fast talking. And boy, I thought all the fast talking mortgage companies were out of the business back in 2010, but holy smokes, are they coming back in the market right now? I had a client just the other day called me up. I had to talk him out of going with a mortgage company that was charging him 3 points to do a mortgage. I'm like, dude, are you serious? You are actually requiring me to discourage you from purchasing or from doing that mortgage? I don't get it. But I will tell you this. If you want an honest and great mortgage, you pick up the phone and you give me a call at 407-250-9144, and I will make sure that you get always sound and correct information to help you become a homeowner or refinance. Heck, if you hadn't refinanced yet, it might not be too late. It's definitely worse than it was last year, but it might not be too late. It's still a good time to consolidate. It's still a good time to get a 15-year mortgage. It might be right for you to refinance. It may be still time for you to get rid of PMI. Heck, if you already own a home, you probably got a bunch of equity built up in there. As I digress, my ADD switches me in 15 different directions. I can't even keep up with myself sometimes. Let's get back on track. Okay, first-time home buyers are at a disadvantage, okay? I got a home buyer class on January 26th at 6 p.m. You must register at WeBringYouHome.com. I need you to help me find people that don't own because their rents are going up so fast they're not going to be able to keep up with it. And prices of homes are going to continue to rise. Let's talk about another issue here, because I think this is super important that we're all understanding what we voted for when it came to our current administration. Okay. And this is not a political message, even though I'm very politically charged. I'm a little pissed off right now because a lot of folks voted in one direction because they just didn't like the other person. Fine and dandy. I don't really care if you liked or didn't like whoever it was. But the administration that we have in office right now is completely ignoring the fact that we're experiencing inflation. And your income did not go up enough to accommodate for inflation. Come on, I could buy a roasted chicken for $5.99 and feed my family. Now it's $9. Bacon gone up 25%. Gas went up 58%. Don't you see what's happening to our economy? And I'm going to tell you, it's not going to get better. It's not getting better. We've got to make some changes, and only you can gather together to get this administration in line. Either you help fix them or we get them out. One of the two. And I don't care which direction you go in, but I'm tired of this inflation. And I'm going to tell you something. The inflation is also what's eroding the bond market, which is what's causing interest rate to go up. So it's like I'm seeing Carter years all over again. And for all you young folks out there, Carter was probably one of the worst presidents next to George W. Bush that we've ever seen. So we've got to understand inflation. How do you fight inflation? You're in the market. You got to be in the market. You got to be a homeowner. You can't be a renter. You got to get in the homeowners. You got to get into being a homeowner and do it as quickly as possible. You have to diversify your assets. That's how we do it. 407-250-9144 or WeBringYouHome.com. I'll be back in 5 minutes with more of Cleve Loveland and the Lone Ranger Radio Show.